Domnul Popescu, domnul Sivan?
Bună ziua, dragi spectatori și telespectatori!
Hello, dear viewers. We are proud to welcome you to the second Accounting and Audit Conference 2022. This is our second edition, and we discussed a bit earlier that it seems that so much has happened since the first edition that it's much more than only the second year of the conference. So we are happy that many of the topics covered in the first conference were developed during the year, and some were to find solutions to them. Others were carried forward to this year, but not only the ones left since the last year. Why am I saying that? Because, well, last year we tried to focus our conference on everything related to COVID and the way accounting and auditing are dealing with that. This year we shifted our focus, and that is digitalization. So the digital hero of an accountant, and how an accountant and an auditor, how they can cope in this occupation. Not only them, but also the ones who are regulating this field of work or checking this field of work, or they are the ones to whom accountants and auditors report. This second edition is held by the American Chamber of Commerce in Moldova, together with the Association of Accountants and Auditors from Moldova, with the support of ACCA and support from Pricewaterhouse Moldova and UTI-Credit. Media partner of everything we do, and one of our biggest friends is Monitorul Fisc MD. Every year we try to find the most interesting topics to be included into our agenda in order to make sure that you and everyone who is interested in this field can really enjoy best information from best speakers. Today and tomorrow, we will have many relevant speakers on that will talk to us about topics that are very relevant in accounting and auditing. So today it's this afternoon that we are working. Tomorrow we'll start in the morning. You can see a broadcasting in Romanian or English. If you stay here, you will hear the entire conference in Romanian. If you prefer to listen to the English version, then you should go there where the conference is broadcast in English. So the language of a conference is generally Romanian. And I would like, well, I could say a lot about how business interacts in accounting and auditing. But obviously my colleague, Ms. Natalia from the association, can tell us more about how the occupation, the people in this occupation perceive the change. Please, Natalia. Thank you, Veronica. I represent here the Association of Professional Accountants and Auditors from the Republic of Moldova. and the entire community of accountants and auditors. From the very beginning, I should probably congratulate one on this occasion. I wish you best of health and best of luck to you and your beloved people. A lot of perseverance in what you're doing. And during these 2 years, you have already proved strength and adaptability to this pandemic, and not only pandemic crisis that we have in our region. Indeed, the occupation of accountants and auditors, many people perceive it differently, but it is a very interesting field of work. It is beneficial for every enterprise, and it's not only for the reason that according to some legal acts, it is mandatory to have an accountant in your entity, but the work done by the accountant and subsequently certified by an auditor is difficult to be explained to the entity, to any other occupation, but it adds a great value, brings a lot of added value to the work of the entity when it's done well and it's clear to everyone. Indeed, as Veronica mentioned, this event is entirely about accounting and auditing issues. The most stringent questions that currently arise, both related to the crisis and to the natural activity of entities. Accountants are involved not only in their professional matters, but also they get involved in all issues related to the economy and accounting and auditing activity. I hope that during these 2 days, we will, well, I know some of the presentations, really interesting ones. And the things discussed here will be useful to us in our future work. And I hope that we will have a very efficient and interesting cooperation during today and tomorrow. Now, I think, Veronica, it's time we start our conference. I agree. And I think that a wonderful start would be having an opening session when we could discuss with several representatives of authorities and friends of our associations about this topic of the conference, about the accountant and the auditor during the digital year. What's the added value? What are the risks? What are the challenges? And so on. So, in this opening session, we have several guests, and I would like to introduce who is going to interact with us today. First of all, Vladimir Arakelov, State Secretary at the Ministry of Finance, Ms. Mila Malai-Râu, Executive Director of AmCham Moldova, Mr. Dumitru Grumeza, Executive Director of the Council for Public Supervision of Auditing, Ms. Andreea Stanciu. She is the coordinator of everything that ACCA means in Southeastern Europe. Mr. Adrian Popescu, Chairperson of the Chamber of Financial Auditors in Romania, and Ms. Natalia Zlatina, Executive Director of ACAP. And since we talk about accountants, auditors, and this digital age, I think maybe we should start with the ones that are supervising, or let's say better say regulate the audit and the accounting activity, and that's the Ministry of Finance. Mr. Vladimir, maybe you could tell us a bit more about the way you see the accountant or the auditor in the digital age. Hello, and I would like to thank you for inviting me an opportunity to represent the Ministry of Finance. Indeed, having seen the agenda and the topics included in the agenda, I was impressed, especially having seen the speakers that are going to present the topics, and I will closely follow the conference during these 2 days. All the topics that will be covered and the arguments, opinions that will come from participants in order to really identify the added value and possibilities to improve and optimize the auditing and accounting activity, regardless of whether it's the public or private sector. When it comes to your question, indeed, over the last years, there have been many activities or institutions that moved or transferred their activities to the online environment in order to streamline their activities, in order to streamline their processes, but also in order to provide more efficient services, to have activities that are closer to the population, closer to the business environment, so that they can access these services easier. Given that as time goes by, there's more and more of them, starting from bookkeeping, the part related to work of such institutions like public procurements that they have to carry out, both public entities and businesses that take part in these public procurements, and also on the control side. We all know we have the register, electronic register of state controls, and everywhere we see digital tools, everywhere we see a so-called interaction that moves from paper to online. And accountants, even though they were the first ones to interact with those online accounting systems, now they have to shift not only their bookkeeping approach, but also the interaction in their day-to-day activities. And they need to improve, both accountants and auditors need to improve their working instruments so that they can meet or make sure that they collect the data from the online and digital environment, so that they can become as efficient as the ones that are providing such services. Every day we need to improve our work, we need to develop our tools, and the Ministry of Finance is one of the entities that works internally on developing such tools. Every day we add more and more services and programs that are available for accountants and for the auditing staff, for instance, internal auditors. We are currently developing a system for the certification of internal auditors. So it will be an information system where internal auditors can be certified and be trained in this information system. That's why using IT can lead to several situations. And during this conference, I hope the possible situations and risks in implementing IT systems will be analyzed. I wish all of you the best of luck. I hope that the results of these discussions will bring an added value, both for the improvement of internal control systems, improvement of public systems, as well as improvement in the quality of the work of auditors and accountants in the country. Thank you. Thank you very much, Vladimir, for this wishes to us. I believe that the Ministry of Finance has always been a loyal partner in everything related to digitalization efforts that the business community was suggesting. And I really count on the fact that this partnership will be at least as efficient as it was so far. And well, we discussed a bit about regulation, so I think we should try and see what are the risks, the challenges, the added value of this digital age on the side of verification or checks that are applied to auditors. In this context, I'd like to challenge Mr. Dumitru Grumeza to tell us a bit more about what is the perspective of CSPA on digitalization of auditors' activity in our case. First of all, I would like to greet the hosts, the guests, all the colleagues on behalf of the on the Council for Public Supervision of Audit. Also, as it is a celebration day, I'd like to congratulate you. I think it's a double celebration because they are both auditors and accountants. And I would like to wish all of you a lot of health and power to work in order to achieve the successes that you have planned for. And of course, I wish us all clear skies and peace. I would like to thank the host for inviting me today. And of course, this digitalization affected the Council for Public Supervision of Auditing and auditors to a large extent. This digitalization started in 2020 when, as we know, the pandemic started. And a significant share of reports, letters, consultations that we currently have with the auditors were transferred to the online environment, while previously reports were submitted on paper with a signature. Now accept everything in digital format, no exception. And all the consultations and answers can be discussed online. We even had cases that we had it in Zoom, over the telephone, so we had no barriers so far, not some questions or answers to questions received. Even the supervision part or the control part, that is a subdivision within our council. So when it comes to control, we started for a part of audit entities, we started to move the control to the online, meaning that entities in parallel are digitalizing their files on the basis of which they carry out their audit mission. So we have online access to the auditors' files so that the controls could be carried out online without physical meetings. Well, of course, controls cannot be completed without a physical encounter, but we try to limit as much as possible the physical meetings. And these face-to-face meetings are mostly about completing, finding the key questions and answers, to make sure that the end of the control adds value, not to leave things not discussed and unsolved, because we want to make sure that the outcome of the control is optimal. And for the future, we intend to keep digitalizing as much as possible by implementing additional services, but we work on that. We try to cope with all of the issues that arise and the one that may arise in the future. And I think we are doing quite good with digitalization, including the work of our council. Thank you. Thank you, Mr. Dumitru. Indeed, we discussed in our specialized committee that many situations happen where the Council for Public Supervision of Audit is open to understand and to go on with the digitalization. And we really hope that we will reach a moment when the certification of auditors will be even more digitalized than it is today, because that would help a lot to make sure that in this respect we have digitalization as well. And speaking of how the business community perceives this new age and how accountants and the auditors help the business community to cope with the new age, I would like to ask Mila from the American Chamber of Commerce, my colleague. So I'd like to ask Mila to tell us more about this, please. Thank you, Veronica. Good afternoon, ladies and gentlemen, dear friends. It is a pleasure for me to see you again during the second edition of the Accounting and Audit Conference. Well, it will be anticipated, but I would like to congratulate all accountants and auditors on their professional day. At the American Chamber of Commerce, we're very proud of our community of professionals, accountants, auditors, tax consultants that come together under the umbrella of a tax committee coordinated by my colleague Veronica, and comes with a contribution and a huge support of co-chairs, Lilia Collin from Deloitte, Yuri Chichibaba from Taxaco, and of course the contribution of all AmCham members in seeing the mission of this committee fulfilled. Of course, you know that there is this frustration from business owners that the accountants, as opposite to other employees of the company who tend to make sure that the company runs profit, the accountants rather look like state authority or tax authority workers, because they tend to bring revenue to the state budget. And I want to tell you that from this point of view, the community of AmCham accountants is very hardworking. Our figures are very suggestive in this respect. We recently calculated that the 150 members of the American Chamber of Commerce generate a profit that represents 30% of the total profit generated by the business community in the Republic of Moldova, and contribute similarly with the 30% of the VAT collected on import. We do appreciate this effort of the accountants and the contribution that is made for the prosperity of our country. We have been following the work of accountants for years, well, both accountants and auditors and financial directors and consultants in the tax committee, and we see that these professionals are always exposed to new challenges, and they need to be able to adapt very quickly to ever-changing working conditions. Last year, we were talking about the impact of the pandemic on the profession, on the occupation, and the way that our trade changed, because we found that it was revolutionary the way the work these professionals have to do now. Now we have a different situation, a tragedy in the region, and again, multiple challenges for the community of professionals. Again, financial flows are disturbed. Again, we have an erosion in the payment ability of some counterparts. All of that, joined with the crisis in energy resources and inflation trends, all of them together are testing, again, the ability of the professionals to overcome these challenges. We, as an association, focus on solutions under such circumstances for the issues happening to accounting and audit, exactly as the motto of our conference is. We do that by several activities. And of course, part of our work is to identify the issues and provide recommendations in order to solve them. And today I would like to draw attention briefly to the ones that so they are visible to everyone. The one that is at the surface, I will not list every one of them, but I hope that you follow what our community thinks, our opinions expressed in the communication resources. Of course, we talk about focus on digitalization, and professionals in the field of accounting and audit need to be among the first ones to digest the new reality, to assimilate the new interaction with authorities, and not only with our stakeholders as well, such as the banks or counterparts. And then we think that it is necessary to keep developing all systems used to interact with state authorities. We have this permanent contribution to the ongoing improvement of like e-invoice tool or other tools monitoring the register of sales and others. We have a good development in promoting the digitalization package. Recently, the government approved the second legislative package for digitalization, and we hope this will make it much more comfortable in accountants' interaction with accounting reports with other parties. Lately, Minister Sergiu Caibu mentioned in a recent interview that the reporting will be simplified. Speaking of reporting, we recall another very topical situation for accountants, because it happens so that the reporting towards the AML services also a task that had to be took over by accountants, and tomorrow is the deadline to file the compliance forms. The community of reporting entities has been very much worried, and we communicated with a lot of people. I saw that our colleagues from ACAP carried out several activities to explain the way that the form has to be filled in. And what we did as a result of a discussion with the management of the service, we suggested that instruction with some methodological guidance on filling out the form. Unfortunately, we still wait for an official approval of its methodological norms, but we certainly believe we will be able to contribute and have them included as a part of the order. And obviously, we think that the discussions will continue among accountants, obviously, but how, what's the right way to fill in these forms, because the sanctions for doing it the wrong way are fantastic, not in the best meaning of this word. Another piece of wonderful news that we think will be achieved in the nearest future, which is also a joint effort with our colleagues from ACAP, is to eliminate the restrictions existing for audit service providers in providing services to joint stock companies. We believe that we will solve this issue and we will ease the work of the auditors exactly in the eve of our professional day. Having said that, I would like to remind you about a new type of interaction among professionals on the platform of the AmCham, a new format that was suggested by Veronica together with the members. We call it peer-to-peer talks. These discussions don't necessarily end up with recommendations to the government. They are meant for an exchange of experience, exchange of solutions in order to streamline the work of accountants, auditors, and professionals from related fields. Again, we believe that these occupations are very important. They need a lot of perseverance and responsibility, and these are features that we sometimes think are eroded in the generations to come. This is what we hear from accountants. It is necessary to have a very thorough approach, and we hope that the generations to come would be really willing to learn, study this occupation. We hope that you will have new trainees and that you keep developing this profession. Thank you very much.
Mila, pentru aceste...
Thank you very much, Mila, for this updated information from the business perspective, but the very last statement is a great connection to Andrea. Andrea, who is in charge of Southeastern Europe at ACCA. And if we are speaking about the training of future auditors and accountants, I think it is Andrea, the best person to speak about this. Andrea is a trustworthy partner for the second year of our conference, and usually she's coming with speakers that it is very difficult to attract for a conference. So thank you very much, Andrea. Please tell us, what do you think about training of auditors and accountants? How should we do this in this digital era? Thank you very much, Veronica. I'd like to thank Mrs. Zlatina as well. You are indeed traditional partners of ACCA. I am very glad to be back to this event. For 16 years, we have been working in the Republic of Moldova in the Southeastern Europe office of ACCA that I represent. But I'm very sad for not being able to be there to meet you face to face, but as we speak about the digital era, we are enjoying these opportunities to be at least virtually in Moldova, if not possible physically. And I'd like to thank all of the participants, both with physical participation and online digital participation, for their interest in this very important topic. I'll be very brief because I understand that we are a bit behind the agenda. So I will just say this. We are positive that drastic changes will occur in the future. I mean, in terms of the accounting profession. And to give you an overall picture, at the beginning of 2020, ACCA made a global study where we detailed what would be the 20 trends that will impact the profession of accountants in the future. 7 of them were related directly to digitalization and automation of tasks. So we know that for sure. We know that the profession will be impacted by this. On the other hand, last year, when we asked about 6,000 of members, students, partners of ACCA, well, we did not ask only 6,000. 6,000 answered if they use artificial intelligence in their accounting processes or in their auditing processes. Only 19% for accountants said yes, and 17% for auditors reported that they have these processes digitalized or that they use artificial intelligence. So we're discussing a lot. We are in a group of people that we are glad to be able to bring under the same umbrella, on the same platform to discuss. But it is clear that we are still visionaries. And it is very glad that we have events on this topic. It is very good that we disseminate this information, because those that have to act for their own and have to improve themselves to be able to become a digital accountant, because we are positive, both myself and the whole ACCA that the job of accountant will flourish if they know how to use the advantages of digitalization. So as I've said, it is very good that we meet on these platforms in order to raise awareness of these topics and to help other professionals to develop as well. As a last idea, I would like to say that professional associations, business associations have a great contribution in this regard. We, ACCA, change every year the qualification. We update our exams, the topics related to digital topics like blockchain are an integral part of our qualification already, and we take it as our responsibility to prepare, to train accountants, professionals. I'm very glad that we have two colleagues from the Global Research Department of ACCA who will come with their presentations at this conference. So one more time, it is a pleasure, it is an honor to be with you. I would like to congratulate you for the conference and for the topics chosen. Thank you. Thank you very much, Andrea. Actually, would like to congratulate you as well, because we work together on the agenda. Also together, we have selected carefully the speakers. As we are already in a regional or international perspective, I would like to invite Adrian Popescu, President of the Chamber of Financial Auditors of Romania, to share with their perspective. Good day, Adrian. Good day. Thank you, first of all, for the invitation to participate in this event. And I would like to use this opportunity to convey the greetings from the management of our chamber. I will speak a bit about the challenges that we encountered in Romania, which I believe are similar to the challenges that you have in other countries, as well as by other professions. At the beginning of the pandemic, we had issues related to the approval of financial statements, meaning that a part of companies could not meet in their general meetings to have the financial statements approved. So government intervention was needed in order to postpone the deadlines, so that all of the companies are in a position to meet and approve the financial statements, also for auditors to have enough time to audit them. Speaking about the verifications or checks done by the chamber members, we had other types of problems here. The classical evidence that auditors used to obtain in order to support their opinion on the financial statement were not relevant anymore. They had to find other solutions, other ways of working adjusted to the pandemic situation. And here, digitalization had an important role, of course. Digitalization, which was somehow started in Moldova, in Romania, meaning that the large companies already were using audit software. So we had to step in as a professional organization and to support small and mid-term companies with audit software, both for the auditing of financial statements and for the organization of internal auditing missions. I was telling that our members had challenges with getting evidence. Imagine how to deal with the participation at stock counting. In the past, we were used to go together with the customer to witness how the stock counting was done and to have physical evidence. During the pandemic, the whole procedure had to be done remotely using various IT tools. So we tried to store images and pictures from our meetings, Zoom meetings with clients, in order to be able to attach them to the audit files. But we have already issues with the protection of personal data. So we every time need to get the consent of the client to store this information. So as I've said, during the pandemic, digitalization started to be implemented at a faster pace. A part of the checks now can be done easier remotely, but at the same time, auditing work will not be fully digitalized ever, because professional judgment comes into play. Professional suspicions that an auditor should always display. So I believe we have a value added here. As long as the checks can be done quicker using IT tools, auditors will have more time for their judgment. At the same time, with the digitalization, a challenge occurred related to staff. Now, it is not enough for a professional in financial accounting area to have only professional knowledge and expertise. They already need to have IT knowledge, which was not such an important and needed a request previously. So now we are starting to discuss about joint auditing teams or mixed auditing teams. So as we have seen, the pandemic also had some positive effects, meaning that the pace of digitalization has increased, and the auditors are already used to facilitate the auditing work, and of course have become members more flexible to accept the situation. I believe that a part of the regulations need to be reviewed as well. I mean, the regulations on the audit work, including the auditing standards, meaning that they have to be a bit more permissive. They should allow acquiring audit evidence in various formats, so that regardless of the challenges we face in the future, for us to be able to continue our work. So I would like to congratulate for the topic that you've chosen. This topic is very relevant now, a topic discussed by all the states. I believe that discussions should be somehow divided on advantages and disadvantages revealed by the pandemic. So one of the advantages is this way to organize a conference in a hybrid manner. And I believe this way of organizing conferences will be maintained even after the pandemic ends. So thank you very much for your invitation, and wish you great successes with the conference. Thank you very much, Adrian. Thank you for listing or sharing with your opinion, the opinion of the chamber on this topic. We do believe that this is a very important topic for all of us, and we hope that the wonderful cooperation that we have between the specialist chambers of Romania and Moldova will continue. And by the way, regarding the accounting and auditing professionals, I will invite Natalia to finalize this panel by telling us more about the prospects of the profession from the digitalization lenses. Thank you very much. First, I would like to congratulate and thank all the previous speakers. So though we are in a digital era, and everyone who wanted to participate in the event heard them, but we will nevertheless convey them to those that were not here with us. Like the other associations, like the other entities, we have also we had to deal with the challenges brought by the pandemic and by the crisis. And though it is said that education is the best arm, we try to use this arm to facilitate, to ease the life of our professionals. I mean accountants and auditors. What do I mean by that? We have organized during 1 month to 1 month and a half, we reorganized our work and we focused on trainings on topics that are of interest for accountants and auditors in order to keep them informed about all of the changes, because lots of changes were made, not only in the area of accounting and accounting regulation, but in the taxation area as well. Well, with regards to other reports, as Mila has mentioned. And unfortunately, we are trying to work on the image of the profession, but sometimes it is somehow maintained as it is in the society. So, because other people think, what is the job of an accountant? They're just preparing a report that is not that large. But to prepare that statement, you need to have knowledge, expertise. You need to know the law and the latest updates to the law. So, of course, we do not provide the trainings on our own. We are helped by other relevant professionals, Minister of Finance, Council of Public Supervision, educational institutions. Every time we find partners willing to help us with our trainings, and we've managed to keep and deliver updated information to our professionals so that they are able to work in a way that would meet the public expectations, because the statements and the other work of the accountants are done for public interest. And because we are short of time, I will end here. And as an eternal optimist, I say that I strongly believe that things will improve, will return to normality. When I say normality, I mean the work we used to have in the past, the frequent face-to-face meetings, because they are much more productive. Though there are many advantages of this remote way of working, because we are in a digital era, but there are some risks as well, such as information loss, lack of compatibility between old technologies and new ones. So I believe that the value added can be ensured only by the knowledge and expertise we accumulate throughout our life. Thank you very much, Natalia. I think that's a wonderful way to end this opening session. Please do not go very far. In a couple of minutes, we will start the first panel. We will speak about the core aspects of accounting and auditing. We will be discussing about the latest trends related to the national provisions in the area. We'll find out about the latest trends with regards to IFRSs, and we will try to understand better the role of an audit from various perspectives. And last but not least, we will try to find out more about ethics in a digital era for a professional accountant and auditor. So we'll be back soon.
Dragi colegi, continuăm discuțiile în
Dear colleagues, let's continue the discussions. And now we will discuss the topics that were listed at the opening panel, as announced by Veronica. So, the name of this panel is Fundamental Elements of Accounting and Auditing. We've tried to collect a list of topics that would be of interest both for the entities that apply the national accounting system, as well as for the entities that comply with the international financial reporting standards. We have not forgot about the auditing work, and of course, we will end the discussions during this panel with elements about ethics and how to comply with ethics rules in the digital era. Let me present the speakers of this panel. Lilia Collin, she is director of Deloitte Moldova, as well as co-chairperson of Taxes Committee of AmCham Moldova. Vlad Roșca, executive and financial officer at WeWire Harness Technology. And as a special guest, we have with us Mr. Andrei Crăciun, head of General Division for Collecting and Processing Data at the National Statistics Bureau. We have also virtually with us Mrs. Natalia Tonu, head of Division of Accounting in the corporate sector, and at the Ministry of Finance of Moldova, and ACCA representative Naranayan, who will be talking to us about ethics. He is head of business insights at ACCA. And now let's start the panel discussions. So I would like to, but before that, I would like to say that during this 2-year period, since the onset of the pandemic and the crisis now, the Minister of Finance and the regulators were very generous with us. No major amendments were made to the legal framework on regulating the accounting work, but nevertheless, the activity has changed because of the situation around us, changes were needed. So we kindly invite you to inform us what were the most frequent requests by the accounting and auditing community to the Ministry of Finance. You could maybe give us a sum up of the questions received from the professionals. I'm sure that you've prepared an answer to those that ask the questions, but at the same time, these answers were not conveyed to others, so they might be of interest to our participants today. Thank you.
Thank you, Natalia. Good afternoon, everyone. I will try to share my screen. I would like to thank you from the very beginning for inviting me to this conference. We've been together with you since the first edition of this conference and hope that will last for years. We congratulate you on being able to bring together many accountants and auditors to this conference, and you put into discussion topics that are of major interest for accountants and auditors. For us at the Ministry of Finance, this is a special opportunity and possibility to be closer to the occupation, to the accountants, to auditors, and to find out what are their issues that they encounter in their daily activity. And as the Ministry of Finance is the regulatory body that provides methodological support to entities, auditors, accountants in the field of legislation, meaning the law on accounting and financial reporting, accounting standards, other regulatory acts subordinated to the law. For today's conference, I prepared two most frequently mentioned topics or questions coming from accountants and auditors. The first topic is transferring the entity from one category into another. We know that once the law on accounting and financial reporting came into force on January 1st, 2019, the financial reporting system has changed, and the categories of entities established according to Article 4 of the law, entities that are micro, small, medium, and large companies, they have to develop and provide financial statements depending on the categories they are part of. While at the beginning, when the law came into force, we received questions about what's the right way to determine the category the entity falls into. Now, over the years, 3 years now actually, there are questions about transferring the company from one category into another. During this time, we had the pandemic, and this influenced a lot the economic situation of some companies. So this question comes up very often in our activity. Let's start with the first time when the entity determined the category it is part of. That's the 31st of December 2018. For the entities that have a different calendar than the calendar year, there are many agricultural companies that for whom the financial year is 1st of September to 31st of August. For them, the reporting date was 31st of August 2019, and as of 1st of September 2019, the first management period started, for which the entity had to draft the first set of financial statements according to the new law on accounting. Speaking about the transfer from one category of another, the entity has to establish for 2 management years as of the date of reporting if it exceeds or stops exceeding 2 out of 4 criteria for the category they fall under. So, to understand it better, I would like to show you a table for micro, small, middle, and big companies. What are the criteria? Total assets, sales, revenues, average number of staff, and number of entities as of 31st of December 2019 and 31st December 2020. Looking at data in this table, we see that the number of entities differs from a year to another, and we can conclude thus that some entities are transferred from one category to another. I would like to tell you that the new established entities draft financial statements as they deem necessary at the beginning of their work. So if the company at the beginning drafts short financial statements for the first two ones, but for the following management periods, if they don't fit into a micro company, then the entity moves into another category and draw financial statements that are simplified. Or if it's about other categories, from small into middle companies, and they need to draft full financial statements. It's very simple. We see the indicators. We check that the entity exceeds, like for a micro, middle, and micro, small, and middle entity, they need to exceed 2 out of 3 criteria, and for the to become a big entity, they need to meet all 3 requirements, like total assets, sales revenues, and number of employees. As you can see in the table, I think that is clear. And we also prepared an example. So it's a conventional company as of the 31st of December 2018. Total assets 65 million lei, revenue 130 million, and 255 employees. At that time, the entity was qualified as a middle entity, middle size, and they needed to develop full-size financial statements. While in the next 2 financial periods, this entity did not meet the criteria for middle-sized company, but to a small entity. That's why for the years 2019 and 2020, the had to come up with full financial returns, while for 2021 can come up with simplified financial statements. Also, the law does not prevent the company from developing and submitting the same financial statements, meaning that even if the company used to be a middle-sized and now for 2 management years it has become a small entity, it can keep filling out full-sized financial returns. There is no nothing in the law prohibits it from doing that. So for its own interest, the company can develop more complex financial statements than the one provided for the category it falls under. Another topic that was very much discussed lately is the documentation of economic operations. We received many questions. Well, like recently, we received a question like one entity submits a document used in the work of the entity, and they are asking, can it qualify as a bookkeeping document, and it has to meet all the requirements provided for in the loan accounting and financial reporting, including the duration of this document storage in bookkeeping for 6 years. Our answers was simply all economic deeds are kept record of based on primary bookkeeping documents. So if the economic operation is justified by means of a document, and this economic operation needs to be included in bookkeeping, then it is a bookkeeping document. If as a result of making this document, no economic operation is registered in bookkeeping, then it can qualify as any other document used in the work of the entity, and it's not a bookkeeping act, and it doesn't fall under the requirements of law on accounting and financial reporting on the side of bookkeeping documents. It is very clear, but still there are questions about the following, like there are no records in the bookkeeping, but the accounting document is there. There are no justifying documents, but there are records. So in this case, paragraph or Article 11 is applicable, saying that the entity has to register the source of the documents. So it is prohibited to register transactions without documents. So there is no such thing. It's very simple, but there are so many questions about it, unfortunately. Also, regarding the time when a primary document should be developed, we always discussed about a reasonable term. What's that reasonable term when primary document has to be drafted? No regulatory act says that it should be drafted at the time or on the day. So there is no such provision, because this depends on the specific features of economic activity. If you talk about delivering some assets, then the document needs to accompany the asset during the transportation. If you talk about a service, then this justification document needs to be drafted upon finalizing the provision of the service. So this means that we use the professional judgment and we realize very well that any economic operation needs to be included in bookkeeping, both at the entity that provides the service or delivers the good and at the entity that is the beneficiary. And the document needs to be drafted and sent in the due time to the other entity. I will leave out now a paragraph and we'll come back to that. Also, we receive many questions about which are the primary documents that need to be used in a specific case. So now we have a continuous development of the economic relationships. There are new bookkeeping elements, many new economic operations, and accountants ask questions about what are the documents that need to justify such operations. So in order to establish if the entity needs to draft a special primary document, the first thing that the accountant should do is to check Article 12 of the Law on Accounting and Financial Reporting and establish if the operation that raises questions falls under Article 12 or not. If it is an alienation of assets, if it's a service provision, is it a transportation of assets outside the company or procurement of assets or rental services from individuals, or if you talk about leasing, rental, and other of goods. So if it falls under Article 12, it means that for the economic operation, a special primary accounting document has to be drafted. Here, I would like to draw attention to the fact that Government Decision 294 of 1998 states the nomenclature of the special primary accounting documents. But before moving there, I would like to draw attention to point C, transportation of assets outside the entity without transferring the ownership right. So there are many questions and interpretations here from entities. I would like to tell you that this is about transporting assets belonging to the entity, meaning that the entity transfers some assets to another entity without transferring the ownership rights. We talk storage, processing, and sending to custody. We are not just talking about transportation services, because it's interpreted that if it's transported from one entity to another and the carrying agent doesn't take over the ownership right, then an invoice should be developed. No, letter C is applied only when the entity transports its own assets for storage, processing, or custody, meaning that they stay on the balance sheet of this first entity, but they are temporarily located with another entity. In this case, a special primary document is drafted. Going to the procedure of establishing whether we should or should not draft a primary special accounting document, and we can look at the nomenclature of special regime primary documents set by Government Decision 294. So we have these forms. They are divided into two categories according to the Law on Accounting and Financial Reporting, and we make reference to Article 12, or if it is for administrative use but has some accounting consequences like a roadmap or a receipt. So if we establish that the document or economic operation that needs to be documented doesn't fall under Article 12 of the Law on Accounting, and it is not a special regime primary document in the Government Decision 294, then it means that we need to draft a simple primary accounting document, a document that should include the mandatory elements established in Article 11 of the Law on Accounting. All accountants know very well that there are templates of documents that were approved even many years ago by the Ministry of Finance, and the Bureau of Statistics. Many of these forms are used even today. Just I would like to mention that when an entity believes that these documents are not suitable to their type of activity, or they want to add some new piece of information, or the format of its primary documents does not work for them, the entity has the right to develop their own primary document templates and to attach them to its accounting policy, obviously, given that these primary documents include the mandatory elements that we will discuss a bit later. Looking at the special regime primary documents, so for all of them, there is instructions and templates of these documents approved by the Ministry of Finance and the Ministry of Finance jointly with the National Bureau of Statistics. Now, going the mandatory elements that I mentioned a bit earlier. So it is elementary. We all know that every document should have a name and a number, a date, the entities that take part of this economic transaction, what's the economic deed reflected in this primary document. But most questions rise about letter G, where we talk about signatures of a persons responsible for these economic actions happening. In this case, I should mention that every entity, when they develop templates of primary documents on their own, and they attach the template to their accounting policy, they may include any other elements besides the mandatory ones that would reflect, for instance, some specific aspects of economic operations that this entity has. And speaking about signature specifically, I would like to mention that primary documents on paper and in digital copy have the same legal power, as we know, but there are some specificities. Article 11, paragraph 7 does not provide explicitly. It just says signatures of people responsible for this economic operation. So here we should mention that holographic signature is put only on primary documents that are drafted on paper. If we have digital documents, then there should be a digital signature. And in this case, I think it's good to consult the law on digital signature and digital documents, because this law sets the main rule for drafting, signing, sending digital documents so that it can be deemed authentic and be equal to a primary document that is drafted on paper. Another question relates to the stamp. Going back, and we see that letter G does not say anything about the stamp. So the people that take part in the economic transaction only put their signature on the primary document or special primary document. And as the law on accounting and financial reporting does not say it is mandatory to put the stamp on a primary document, it means that we don't have to do that. We know very well that, well, we all know we're all accountants. We all work with regulatory acts. We know that there are bylaws that mention that the stamp should be applied as appropriate. But since the law on accounting does not oblige to do that, it means there is no obligation for the stamp to be applied. Moreover, I would like to mention the law on entrepreneurship and companies, which is even older provision, but everyone forgets about it. And for some reason, some entities, even until today, request stamp on primary documents, especially on special regime primary documents. The law I mentioned states that enterprises are not obliged to have and apply the stamp on records of any nature. So here we talk about all documents, all acts that a company can draft, and it means that primary documents fall under this provision, and primary documents have no liability to be stamped. That is everything I wanted to say. I was very fast because, as I understood, we are time tight. So I would like to congratulate now the accountants and auditors on their professional day. I would like to assure you that the Ministry of Finance was and always will be by your side. We hear you. We work with you all the time. You can call us at any time. You can ask us any questions. I wish you good luck in everything that you do. I wish you happy families, peace, prosperity, few issues and many more reasons for happiness and satisfaction. Thank you. And if you have any questions, I'm open. Thank you very much, Ms. Tonu. I hope you brought some clarity into questions that were worrying us, but particularly would like to thank you for assuring us that you are on our side and for congratulating us. If we receive questions, as we did last time as well, we will ask them to specific speakers. We are now, fishing for the questions from our audience and from the ones that are connected virtually. Now, staying in the same line, law on accounting and financial reporting, it also provides for another set of standards that entities in our country have to apply. And these are the international financial reporting standards. They have also been amended, and I would like to ask Lilia Collin to make a summary of these amendments and to the international financial reporting standards. Of course, in the time that we have for discussions in this panel, it's really, well, the time is short, and we selected some standards that would be common for everyone and more interesting topics for the entire community and entities. Please, Lilia. Thank you, Natalia, for introducing me. Let's move to the amendments that took place under IFRS standards in the last 3 years. But before going to those amendments, I would like to tell you that it is my pleasure to see the interest of the business community towards amendments happening to IFRS standards, because they are a reference framework, not just for entities applying IFRS standards, but also for entities that apply national accounting standards. I had a small presentation. I prepared a small presentation to make it a bit more visible what exactly changed in the IFRS. Here, I would like to open some brackets. I want to say that big changes did not happen, meaning changes that would be comparable to implementing IFRS 15, revenues from contracts with clients, or IFRS 9 or IFRS 7. In the last 2 or 3 years, more amendments happened to the existing standards. Some of them were proactive, as recommended and requested by the business environment. Others were reactive because of the changes happening in the geopolitical environment. So if we try to group these amendments, so I put them divided them into 4 big categories. Sorry, some of them became mandatory as of 1st of January 2021, and that is amendments to IFRS 4 insurance contracts, meaning that the Council, ISB, accepted temporary exemption from standard number 9 until number 4 comes into force. This was there was a reform to EBOR stage 2, and as it was a quite complex reform for the countries that apply rates like KIBOR or Euribor, knowing that some of these rates are going to be not used in the near future, it was necessary to make a transition as smoothly as possible, so that the transition from one reference rate to an alternative one would be smoothly received by the business community. Another set of amendments entered into force on April 1st, 2021, and we'll come back with details to this after this slide. this related to an amendment to IFRS 16 leases, which makes reference to practical advantages related to COVID-19 related rent concessions. As of 1st of January 2022, there is a set of amendments to some existing standards. We will discuss about them a bit later. Just let's list them quickly. That's IFRS 3 business combinations. So the reference to the conceptual framework was amended. Then we have an amendment to property, plant and equipment standard, number 16, an amendment to IAS 37 about provisions, contingent liabilities and contingent assets. Specific definitions were introduced about what we call onerous contracts, and a number of IFRS standards were improved. It was a cycle which is developing from 2018 to 2020. So at the 1st of January of 2023, there will be another set of amendments, such as IAS 1, where we have a revised classification of liabilities into long-term and short-term. Then also amendment to the same IAS number 1 about presenting accounting policies, and we'll discuss a bit later about it. And to make sure that we have time, let's move immediately to the amendment to IFRS 16 leases and COVID-19 related rent concessions. Before talking about the amendment of year 2021, I'd like to say that this standard was amended in May 2020. The amendment of May 2020 introduced such definitions such as COVID-19 related rent concessions, and these amendment provides the lessees with an exemption from assessing whether COVID-19 related rent concession is a lease modification. So if they are lease modification or not. So which means this amendment, the one of May 2020, was supposed to be applied for all payments or any reduction in lease payments originally due on or before 30th of June 2021. But since the pandemic continued after 30th of June 2021, it was necessary to extend the period of applying this exemption, this practical advantage of benefiting of the exemption, to see if the rent concessions lead or do not lead to lease agreements. Like transitory agreements, it is important to mention that if the economic operator applied the amendment of May 2021, it will be applied differently. If the economic operator applies the amendment of May 2020, then the amendment of March 2021 does not bring any revision in the financial statements related to these concessions. If the economic operator did not apply the amendment of May 2020, then starting with the 1st of January 2021 decided to start applying it, then this advantage is going to be applied for all concessions for lease payments starting 1st of April 2021 until 30th of June 2022. For the lesser, if the service is applied, it should be applied retrospectively with an adjustment in the opening balance of the result reported at the beginning of the annual reporting, without restating comparatives. What is this? In English, that is called modified retrospective approach, meaning that the opening balance is reflected directly in the reported result or other elements of own equity, and it is not that the comparatives are not restated. Let's move on to the set of amendments that is supposed to be applied as of January 1st, 2022. Why is it important to talk about them now and not next year? Because we have provisions of standard IAS 8 accounting policies, which makes reference to the fact that in the financial statements for the current year, 2021, the economic operator has to submit the potential impact from applying the standards that come into force in the period starting immediately after the reporting period, which means that for the financial statements for the 31st of December 2021, in the complete set of financial statements according to IFRS, there should be included an assessment of a disclosure, first of all amendments from the regulatory framework that are going to happen in the immediate future, and an estimation of the management what would be the impact both in terms of quality and quantity. So let's go briefly through the standards that were amended. So looking at the first one in the list, IFRS 3 business combinations. In this case, what was amended is the definition of a concept framework. The ones who applied IFRS 3 in the past probably noticed that there is a reference in the standard to the concept framework of 1989. And starting with January 1st, 2022, the reference has changed and we make reference to the concept framework of 2018. Why this adjustment was needed? Because along the years, since 1989 and until 2018, there is new definitions, assets and liabilities that were not existing in 1989. And there was a question, how do we treat them in a business combination? Will they generate lines of assets and liabilities or not?
Amendamentele la standardul IAS 16, imobilizări corporale.
So amendments to IAS 16, property, plant and equipment. We'll discuss more details on the next slide. So here we speak about revenue resulting from selling the products, from testing the equipment that was procured up to the official commencement, to put it like this. Another change was made to IAS 37 provisions, contingent liabilities and contingent assets. Here, the novelty was the introduction of such definitions as onerous contracts and for the cost for the implementation of the contract. So it was important to clarify what this cost is about, what costs should be taken into account and which should not. Also, some improvements were made to IFRS as a result of the 2018-2020 cycle. Here we speak about improvements to IFRS 1. IFRS 1 is the standard that is applied by business operators that decide to adopt IFRS for the first time. And if we are to speak about this applicability, of course, for the businesses that are already reporting according to IFRS, this improvement does not bring any value added. However, the businesses that decide to start reporting according to IFRS is increasing every year. And here, we need a special rule regarding how the IFRS should be adopted by a subsidiary of a group that is already implementing or is already reporting according to IFRS. Another improvement was made to IFRS 9 financial instruments. Those that implement the standards know the rule of 10%. So this improvement reconfirmed the 10% rule that we use as a factor to recognize financial liabilities and how it should be applied correctly. So if we are speaking about this improvement, it is important to note that the 10% rule has to be applied for all future cash flows that are to be received by the entity as a result of derecognizing the liabilities. Another improvement was made to IFRS 16. We've already discussed about it. So the improvement of this standard continued. Those that implemented have noticed that the illustrative example referred to different examples, improvements brought to leased premises and leasing stimuli. According to their nature, they are very similar. However, they have a totally different accounting treatment. So in order to avoid any possible confusion, a change was made so that example 13 refers now only to leasing incentives. Also, an amendment was made to IAS 41, agriculture, regarding the estimation of the fair value of a biological asset. Let's continue with the next slide. So let's continue to the amendments related to IAS 16, property, plant and equipment. I've chosen this standard because most of the businesses that report according to IFRS have property, plant and equipment. What are the amendments? Well, before presenting them, I would like to tell you about the current provisions that we have now. IAS 16 provides guidance on what should be regarded as initial cost of the property, plant and equipment, PPE. It refers examples of directly attributable costs. These directly attributable costs include the costs for the testing of correct operation of the assets after the net collections from the procurement during bringing that asset to the location and condition necessary for it to be capable of operating in the manner intended by the management. In practice, this provision was understood differently by business operators. Some entities deducted only the sales revenue during the testing period. Others deducted the revenues from all these sales until the asset was brought to the location concerned. Meaning when the asset was taken from one location to be brought to another location, it was regarded as a testing period as well. And the entry value was reduced by the value resulting from the sale of the items resulting from the testing of the asset. For some entities, the revenue deducted had quite a significant area and sometimes were even higher than the cost of the equipment. So what are the amendments? The board decided to prohibit reducing with the revenue obtained from the sale before the asset is available for use. The main arguments that were put forward in order to implement this amendment included the fact that both the revenue from the sales of elements produced by testing as well as the costs meet the condition of the revenue and expenses from the conceptual framework. That's why they have to be reflected in the profit and loss account according to the relevant standards. For the revenue, IFRS 15, revenue from contracts with clients, and for costs, IAS 2 stocks. The previous requirement would result in an unfair presentation of the outcomes of the entity because the revenue were underestimated as well as the depreciation was underestimated as well. That's why this amendment was needed. Speaking about a comparison between IFRS and national accounting standards. It's important to mention here that in the national financial reporting standards, the part about deducting the revenue obtained from the testing was not included from the very beginning. So this amendment made to the IFRS somehow aligned the provisions, the international provisions with the national ones. Another amendment the cost for the production of end products should be recognized according to IS2, and new requirements were introduced for revealing the information. So the idea is that in the financial statements, we have to introduce information on the revenue and costs related to these end products. Regarding transitory provisions, it's important to mention here that we have to apply retroactively and we have to use the modified retrospective approach. Why modified? Because this transition should be applied only for the PPE that at the moment of transiting were in a testing period, and the net effect of the new standard should be reflected directly in the result of the previous periods. For a better understanding of this treatment, my goal is to show an example. So it is about a business entity that the reporting period of which ends on December 31st. I have to remind you that this amendment is applicable starting with January 1st, 2022. For the set of financial statements as of December 2022, we will have to present a comparative period. The comparative period for 2022 is 2021. Hence, we have to go back to January 1st, 2021 to see if in our portfolio we have PPE that are in a testing period and have to be cleaned up, to put it like this, by the revenue that were removed, adjusted from the entry value of the PPE. So let's assume that we have a PPE. As of December 31st, 2020, they had some PPE, the cost of which was diminished by 1,000 monetary units, resulting from the revenue obtained from the selling of items produced during the testing period. In addition, during 2021, the same PPE generated some products during the testing period, generating revenue of 500 monetary units. So we have 1,000 monetary units resulting as a result of the activity in 2020 and 500 monetary units in 2021. The amended IAS 16 should be implemented as follows. We go back to January 1st, 2021, and we adjust the entry value of PPE in construction with these monetary units by debiting this account. For the end of 2021, as of December 31st, we make a similar adjustment, but the impact is presented directly in the profit and loss account because 2021 is a period of comparison. And here we have a question, how to reflect this amendment from the tax point of view. So if, according to the provisions of the tax code, it is not clear if the implementation of any amendment would generate or not different treatments from the tax and accounting point of view. My understanding is that with the transition to the amended IAS 16, in the financial statements of business entities will have a temporary difference because we are speaking about PPE that a priori have an entry value for tax purposes that are different from the accounting value, and this difference should be regarded as temporary and respectively generates a deferred tax, either in the assets or liabilities, depending on the indicators. Let's continue with the next standard. I will just present it very briefly. I will present the amendments to IAS 37 and the fact that the definition on an onerous contract was introduced. What does an onerous contract mean? It is a contract signed between a business operator, supplier, and a buyer, where the revenue resulting from the implementation of this contract do not exceed the expenses incurred to implement this contract. How is it possible? It depends on the evolution on the business market. Inflation, the unit costs have increased. Why this clarification was needed? Because when the previous standards on the revenue, such as IAS 11 and 18, were withdrawn, these contracts remain somehow uncovered. For example, the board came and decided to include this definition in IAS 37 in order to bring clarity for everyone who are reporting according to IAS what costs should be included when we want to determine whether a contract is onerous or not. So here they have to include all the costs that relate directly to the contract. A decision was taken that by including all of these costs, we will have a more useful information for users, and the level of professional judgment of accountants is decreased when determining whether this cost is related to the potentially onerous contract or not. So that's all that I wanted to tell you briefly. That was a brief refresh regarding the changes made to IFRSs. We are here open to answer your questions or provide clarifications if you have any questions. So we are ready to discuss all of your questions depending on the time available. Thank you very much, Lilia. Maybe our colleagues from the room are applying already these amendments or plan to apply them. Did you have any challenges or do you have any questions? Or you just would like to comment something regarding what you've heard? Regarding the amendments presented by Lilia, I liked the most the information, the comprehensive information about the leasing incentives and the information about the onerous contracts. So if you have any comments, please. Oh, you're still thinking, right? Okay. While you are thinking, while you are collecting the questions that you would like to ask, let's gradually move to the next topic of the conference. So we have discussed about issues of accounting and reporting in order to have a comprehensive picture and in order to make sure that everything that the accountant did and is reflected in the financial statements is a true and accurate image of the current activity of the entity. We have to invite an external auditor to confirm that. In our society now we have a minor problem, I would say, with the audit, and we would like to clarify things in this regard, and we would like from the perspective of the entity. I mean, the perspective of those that are receiving auditing services, to explain to us what are the benefits and why the entities should use the audit services. And I invite Vladimir Roshka, who is the admin director and chief financial officer. Why I reiterate this? Because I know that many people know Vlad as an auditor, but today he's not wearing the hat of an auditor, but the hat of a chief financial officer and administrative director. So please tell us from the perspective of the entity, whether an external auditor is a need or a luxury for an entity. Dear colleagues, I would like first of all to welcome to you to this conference that is becoming a wonderful and nice tradition dedicated to the Professional Day of Accountants and Auditors. I was invited, as Mrs. Zlatina mentioned, I was invited to present some insights on the compulsory audit of financial statements. So as Mrs. Zlatina has mentioned, from the perspective of an entity receiving the auditing services. As Natalia mentioned, I used to wear the hat of an auditor, so I understand both perspectives, the one who audits and the one who is audited. So I will try to share with you some of my ideas and perceptions accumulated during my experience. And regarding this problem, that is worth discussing again, 4 years since the implementation of the local law. I mean, the problem of compulsory audit, the issue of compulsory audit. I would like to start by describing the context, the background, why we are discussing today about this, because we know that the compulsoriness of the audit was introduced by the new law on accounting and financial reporting that was approved back in 2017. So it's 4 years ago. And we find that in 2021, a large share of the medium-sized and large entities experienced for the first time the auditing of financial statements. We know that this compulsoriness in 2020 was curved and then annulled overall because of the pandemic, and perhaps in 2021 the business community expected the same approach from the authorities. I know from my practical experience that many hoped until the last moment that this requirement will be annulled for 2021 as well because of the pandemic. So all of these factors somehow triggered these discussions in the society among businesses regarding the timeliness of compulsory auditing of financial statements. And because of this, I have a feeling that auditing is viewed now as a necessary bad thing or something imposed on businesses by the law. And that's why we are having this discussion today. And I would like to clarify some things today to identify the factors that resulted in this stereotype and to identify some benefits of the compulsory audit of financial statements, by underlining the fact that the situation is not that bad. So the first factor that resulted in or triggered these discussions, well, I think this was generated by the fact that businesses indeed hoped that in 2021 we'll have the same experience as in 2020, that this requirement will be annulled. That's why many of them did not hurry to conclude audit agreements, and they did not perform interim audits during the year. All of the requests to conclude audit agreements were made in the last or hundreds of meters, to put it like this, in February. And because of that, the demand on the auditing market increased significantly, and the auditing firms did not manage to cope with this very high demand in a short period of time. And because of that, we had many tensions in many companies, including in ours. We did not manage to finish the audit in due time. Another factor that we identified is the wrong perception that the society has, that business community has, about financial auditing or compulsory auditing of financial statements. We hear often some ideas by businesses, public officials, as well as high-level officials about the need to perform the audit without them understanding in details what is the purpose or the core goal, the main goal of financial audit. Many people confuse the financial audit with related services that in theory could be provided by auditing firms or qualified auditors such as business consultancy, tax consultancy, legal consultancy if you wanted, which in theory could be provided by auditing firms and qualified auditors, only that not on the basis of an agreement on the auditing of financial statements. And because of that, given these preconceived ideas, we have this confusion and frustration on behalf of businesses when they understand what is the actual purpose of a financial audit. Another factor that we have identified are rather of psychological nature, because all of us understand that when you are verified, when your work, your activity is checked, people have a kind of defense mechanism to protect them against the control or these verifications. The auditor is viewed as a controller, most often by the accountant, that was contracted by the company to check on the accounting work. But this is not so. This is not true. We have to dismantle this stereotype, because during the audit of financial statements, the auditor is looking for evidence to confirm the amounts included in the financial statements. They do not focus on errors or mistakes as it is done during the tax inspections or the experience that the accountant had in the past. So obviously, an accountant that is dealing for the first time with an auditor perceives a person who comes and asks questions, many times challenging questions, that are doubting facts and statements, is perceived as a tax inspector or another type of controller who came to check their work. Second, accountants need to understand that the responsibility for financial statements does not belong to them exclusively, those that produce the financial statements, but rather belongs to the management of the entity that take business decisions on a daily basis and have to be accountable for that by signing and approving the financial statements, because the law states that the financial statements of the entity is signed by the manager, by the leader of the entity. Another factor, the fourth one that I identified, would be the expectations of business community versus the reality. Oftentimes, and this is also deriving from the wrong perception of the financial audit, and often business representatives have wrong expectations from financial audit, because they expect all sorts of consultations, assistance, or sometimes assistance in preparing financial statements, some tax returns, a verification of the lawfulness and a check on the extent to which they comply with the law. And during the audit itself, they realize that they do not receive this consultancy, and they're somehow frustrated because their expectations do not meet the reality. I want to say that the auditors are always willing to provide support and consultancy to their customers in very areas where they are qualified, but the law states clearly that during the audit of a financial statement, auditors do not have the right to provide such services. I mean, they cannot advise on how to prepare the financial statement, how to prepare the tax returns. They are not allowed to give any management consultancy, because this would affect the independence of the auditor and of the professional judgment and skeptical attitude. The attitude of an auditor, unfortunately, cannot be replaced for a friendly one. This professional skepticism is stated expressly in the law. The law stipulates expressly that the auditor should have a professional skepticism in order to be able to maintain his or her objectivity and independence when they have to express their opinion on the quality of financial statements. As a conclusion, I would like to say that considering the positions that I had in the past, chief accountant, financial management manager, as well as an auditor, I understand that the audit is not a necessary bad thing. In the companies that I worked, there was never such a discussion whether to have an audit or not. Audit is a component part of the process of producing financial statements. The fact that this has become compulsory with the introduction of this law did not change the situation at all in the entities where I worked.
This happens because the entities I worked for had foreign founders, and obviously all foreign companies, since the founders of the company are outside, they ask for an audit of the financial statements in order to have a certainty related to the reports and figures reported by the local management. What could we say to conclude on what are the benefits of the audit of financial statements? First of all, I think it's a great benefit for accountants because they transfer the risks of error, unintended errors, or let's say risk of omissions in financial statements. They transfer it from the management of the company to the auditor, because when the auditor certifies the financial statements, he or she takes over the risk related to this financial statement in front of stakeholder associations, shareholders, as well as towards the state or other financial statement users. Secondly, this raises trustworthiness of the company in relation with the business partners, clients, suppliers, last but not least, employees of the company, who can have a certainty that they work for a company that submits high quality financial statements, make transparent disclosures, and work in line with the law. A third benefit I found is an easier access to credits, to loans at local level, but also to European funds that started and will continue to come to our country, because the access to these funds is conditioned by having audited financial statements, which means by having a transparent work and reporting. Also, it is about an increased trust of a management towards a financial director in front of the shareholders that are running this business. This is everything I wanted to mention. I would like to thank you for your attention. And if there are any questions, I'm glad to answer, to share some of my experience. Thank you. Thank you very much, Vlad, for the things you emphasized in the context of promoting of our profession. And you also gave us food for thought for entrepreneurs, for business representatives, when they ask themselves, is it necessary to contract an external auditor? I'm speaking about external audit because this was the topic for us right now. So as I was saying before, is it a necessity or is it a luxury for the entity? You know, now we don't have any questions, I think, but we will gather all of them and ask our speakers. All of us so far tried to work on the image of a profession of accountant and auditor. And another advantage for the accountant profession is the ethics, which brings a lot of benefits. We follow all these aspects as well, but sometimes there are temptations, and these temptations are even stronger in the digital age. So now I would like to ask Narayan, as he's connected, to tell us more about some aspects of following ethic rules in the digital age and what challenges professionals could encounter when following rules of ethics. Please, Narayanan.
Thank you very much for your kind introduction, and hello everyone. It's a pleasure to join all of you today for this really interesting and really important discussion. As was mentioned, I'm going to spend about 15 minutes discussing digital ethics, in particular with a focus on AI. Because we have 15 minutes, we thought we'll make it a little specific so that we can talk about one thing to get into it a little bit more. So we'll talk about AI, artificial intelligence, and we'll talk about ethical issues in respect of artificial intelligence that are particularly relevant for accountancy and finance professionals. And I would also like to make the connection with ESG, which is environmental, social, and governance considerations, because ethics and ESG are connected with each other. They both have to do ultimately with doing the right thing today so that we generate long-term value in the future, sustainable value in the future. So just to take the thinking forward, I'm going to now try and share my screen. So hopefully all of you will be able to see that fairly soon. And then I will just put myself onto full screen. Since I haven't, I mean, if there's any problem with the video or the audio, please let me know. But if I'm not hearing back from anybody, I'm assuming that everything is fine. And so I will proceed. The first comment that I would like to make is just to say that when we talk about ethics, I'm basing my comments today on a piece of work that ACCA, the Association of Chartered Certified Accountants, which is headquartered in the UK and which is where I am. We did this in partnership with Chartered Accountants Australia and New Zealand. And we looked at a global study with guidance from IASBA, which is the International Ethics Standards Board for Accountants based in New York. And so the study looked at AI ethics and ESG, but specifically also the impact on the 5 fundamental ethical principles set out by IASBA, because those are the principles that are followed in some shape or form by the local codes of over 200 local codes of ethics of over 200 accounting bodies around the world, including ACCA. So that's, of course, the 5 principles there: integrity in terms of being honest and straightforward, objectivity in terms of managing balancing different interests, basically, professional competence and due care, which is about having the knowledge and skills to discharge your duties, confidentiality in terms of how you deal with data and information, and professional behavior in terms of compliance with applicable laws and regulations for the tasks that you are carrying out. So when we talk about AI ethics, I just want to keep that ethical framework in mind from IASBA. The other thing I want to do for setting the scene is who's using AI right now. So we did a study as part of this to look at who's using AI in accounting and finance at the moment. So globally, we had 4,652 respondents. So these are all people working in accounting and finance in some way. And then Central and Eastern Europe, we had 218 respondents. So as you can see, if you look on the left-hand side, in terms of using AI for accountancy and finance-related tasks, so things like preparing financial statements, management reporting to inform decision-making, roughly about 1 in 5, about 20%. And actually the CEE and the global numbers are very similar. While for audit and assurance, it's under 10%, about 6 to 7%, depending on which group you're looking at, are currently using AI. So this is the current reality today. And in case you're wondering, in audit, for example, AI can be used for things like more sophisticated fraud, assessing for fraud transactions and so forth, because machine learning is quite good at finding patterns within the data. So there are multiple use cases, which I won't get into detail now because this is about ethics, but it is being used in accounting and finance today. This is not a fictional thing about the future. So when we consider that it's being used today and it will get used more and more as we go on, the issue of ethics becomes important. Now, I said we would talk about it through these 3 areas of ESG, environment, social, and governance. And I want to approach ethics from that perspective. So if you take the first point, environment, AI is both a problem and a solution. AI is a problem because we're in a world of exploding big data. More and more data is coming through. And also the processing power to deal with that data is increasing. And AI is a big part of that. AI is very good at dealing with unstructured data. So structured data is things you can put inside a spreadsheet, rows and columns. Unstructured data is things like emails, voice, text data, pictures, visual data, things which in the past we would not analyze, but now we can because we have AI. And as the amount of AI use increases, this is all powered by data centers in the cloud, and they generate heat. And so there is a huge amount of environmental impact because the heat requires cooling chemicals. And there are a lot of discussions happening in the world around, how to manage the expected increase in the use of the need for processing power and the environmental impact associated with that. Now, for accounting and finance professionals, where the connection can come is in things like procurement and vendor management, when they are thinking about dealing with AI solution providers for their organizations, for example. And if you think about the 5 fundamental principles, professional competence and due care becomes an important factor because you need to understand that this is even a question that you could be asking, which you may not be asking. And vendors, the big vendors are starting to think about it. So IBM, we worked with in this piece of work, and they're instituting this framework called responsible computing, where they think about a whole range of issues so that it's not just achieving a computational result, but it's also doing it in an environmentally responsible way. So that's where AI can be part of the problem, but AI can also be part of the solution, because one of the things also, if you think about a big development right now, is in the field of sustainability reporting, ESG reporting. And integrated reports require much more narrative information and non-financial reporting. And because it's non-financial reporting, it's text information, which is there in different types of company filings, regulatory reports, and so forth. And so these are difficult to analyze with traditional systems. So again, AI, because natural language processing can be used for unstructured data, is being used to help understand non-financial information. And some tools where AI is helping is in the area of greenwashing. This is where companies say that they're very environmentally friendly, but they're not actually doing anything. So this is a tool we worked with a company called Data Moran. So they look at this lens of double materiality. So the impact on the vertical axis and the financial materiality on the horizontal axis. And they look at a range of parameters. So this chart is, I think, for the financial services sector. So across, things like human rights, employee rights, climate change, waste management, market competition, innovation, things which are not normally from a financial lens you would look at, but which have ESG implications. And their AI platform can help understand, where an industry is on some of these parameters by looking at a vast amount of information and company reports and filings and things like that. And it allows individual companies to benchmark against that to see where they stand. So, here where when you think about ethics, integrity is a factor because AI allows, accounting and finance professionals to question and challenge when there's an integrity issue around greenwashing in terms of checking green performance compared with green claims and marketing, which is being done. So that was the E. When we think about the S, which is the societal factor, AI has some very important implications here as well. In the study of several thousand people, as I mentioned, we asked them, what do you think the impact of AI, if I was to say, is positive or very positive? When you look at overall standard of living, it's almost 2/3. But when you look at level of inequality, it's half of that. It's about 1/3. And so what, respondents around the world, accounting and finance professionals around the world seem to be telling us is that people are quite positive that AI will improve living standards. It will create wealth. But people are not so sure if that benefit will be shared in an equal way. So it might increase existing inequalities which are already there in society. And one of the responsibilities of accounting and finance professionals is to think also about the public interest. If you think about the ethics code, for example, there is a clause around NOCLAR, which is non-compliance with laws and regulations. So professional accountants in some situations, extreme situations, can even go outside their organizations to file a complaint if they feel that, there aren't credible, responsible channels within an organization, and they need to go outside because they feel there's a serious non-compliance. So the public interest is also really important with new technologies like AI to make sure that there is no exploitation. And I think that will be an important ethical factor as well. And finally, when we look at G, which is the governance aspect, and this report, by the way, is available for free on the internet on ACCA's website. So I'm just summarizing for today, but you're welcome to have a look at the full report. But a big part of the report looks at governance issues, and we highlighted 10 areas relevant to an organization, as well as 2 broader areas around philosophy and regulatory landscape on the left-hand side. I won't go through all of them today, but I wanted to make a few headline observations when it comes to ethics. So the first thing I would say is that when we are thinking about governance, tone at the top is the overall umbrella factor that determines the success of governance. So that's why that number 1 red bar on the top, the leadership matters. It doesn't matter what people say about ethics. It doesn't matter what is written in the ethics policy. I mean, it matters, but the average person in the company looks at the leader, and how the leader behaves is their view of how seriously ethics is taken within the organization. So that's a key aspect, leadership, when you think about governance. Another very key aspect is data governance, and that has important ethical implications, and it's linked to AI because AI uses much more data than many other types of systems. And so how the governance around that data is managed becomes very important. So in this study, we looked at 2 aspects in particular, data quality and data confidentiality. And we looked at each of those aspects across the life cycle of data. So when the data first comes into the organization, which is data collection, then data use, how it is analyzed, secure storage, how the data is kept, dissemination or spread, so how the data is shared with third parties, and lawful destruction, how the data is thrown away or responsibly destroyed. And when you look across that life cycle for data quality, and we said, where is the greatest challenge with data? So for data quality, it's a sloping line from left to right. So basically the greatest challenge is in the first step, which is collection. And then the challenge becomes less and less. So effectively what people are telling us is that if you get your data quality right in the beginning when you're collecting it, it will make your life much easier as the data goes through your organization, which seems very logical, but it's a very important point around how to think about governance of data. The initial step matters a lot for data quality. On the other hand, for data confidentiality, it's more like a normal shaped curve, a bell-shaped curve, which is the highest in the middle, which is the secure storage. So the biggest risks, and I talked about confidentiality being one of the 5 fundamental principles in the beginning. So the biggest risk, ethical risk on confidentiality is in the secure storage aspect. So basically what people are saying is that as long as I'm doing something with the data, I'm collecting it, I'm using it, I'm sharing it, I'm destroying it, it's easier for my organization to be confident that, or we are managing the data in a confidential way. The biggest risk is when we just store it somewhere, I guess, and forget about it. And that's when there is more of a risk around breach of confidentiality. So those are aspects that the organizational governance structures need to consider. On data quality, of course, is also links to the ethical principle of professional competence and due care. So for AI, and also I would say professional standards, because this is about compliance with laws and regulations as well. If you have GDPR, for example, in the EU, where you can get fined a percentage of your global revenues for breach of data confidentiality and data privacy regulations. So these are important considerations. I think another aspect on AI and data governance is around bias in the data. So the way machine learning and AI works is that the training data set, which is used to train the machine learning algorithm, decides how the AI will make decisions in the future. So if there are biases, if there is bias within the training data set, then that same bias will be exhibited within the use of the AI system in the real world production environment. So in an audit environment, if you trained it on a set of transactions, but for example, you were looking for fraud, and there was this statistical evidence in the training data set that whenever a transaction was done outside the normal office hours, for example, that was highly correlated with that transaction being a fraudulent transaction. And so the algorithm learns that, but then it doesn't perhaps pick up that, there could be certain scenarios where those transactions are legitimate. For example, maybe it is shift workers in some kinds of manufacturing industries where a lot of activity happens within certain timeframes. So the system has to be trained properly, otherwise there will be biases and incorrect assumptions within the system, and you won't get the value from it. So again, ethically, if you want to have the kind of competence and due care, you need to understand what the system is doing. It cannot be just a black box. It cannot be just a magical thing where you just put something into it and the AI gives you something and you have no idea what happened. I think the other final point I would make around AI and governance is regulation. And this links to professional standards in terms of the ethics code. A lot is happening right now. A lot is happening on AI regulation, and it's evolving. The EU issued some guidance recently, last year, where they are taking a risk-based approach. So they are splitting AI use cases into different types of risk factors. So if they feel that, it is not a very high risk use case, then maybe you don't need so much regulation. Maybe if you're using AI in the background to make a movie recommendation on Netflix or whatever, it's not something which is a very high risk use case. But if you're using AI to determine if somebody has cancer, that's a very high risk use case. And so, there are different levels of risk and different regulations associated with it. And importantly, the regulation is different in different jurisdictions. So, and this will also be linked to data regulations as well. So these will all be important factors in terms of satisfying ethical obligations, having a sense of what are the applicable regulations in the jurisdiction that you are in. So finally, just in conclusion, so when we think about managing ethical risks, I think it's very important to think beyond the technology. The technology is the starting point, but you have to think about leadership, which is setting tone at the top. That decides how ethical the organization is. Think about sustainable long-term value, because if you get it wrong and if you do something unethical and your company's name is in the newspaper, that's long-term damage. Thirdly, don't just think about process, think about professional judgment as well. So it's not just a checklist where you say, I've done this, I've done this, I've done this, that's it, I'm ethical, that's it. With AI, it's going to create new situations which we may not have seen before. So we have to apply our judgment in every scenario, in every situation. And so we have to think about it from the perspective of a culture as well of compliance in letter and in spirit. Fourthly, I would say joined up delivery and oversight. So cross-functional teams where people and data are connected is really important. You can't have an accounting person or a business person saying, I don't know, the AI did something, not my problem. And the technology person saying, I don't know, I did the programming, I gave him the AI system, I don't know what he did with it. So you got to have cross-functional teams where these people are talking to each other. You got to have, because otherwise you'll create ethical risks and malpractice risks. Also, vendors, you need to understand what they are doing. So that's, as I said before, professional competence, due care, and also mechanisms for questioning the decisions, whistleblowing. So the corporate governance factors as well around how did the AI come to a decision. So those will be important factors ethically as well. And finally, prioritize data management. So as I said, data quality, data confidentiality, key ethical factors. And lastly, build knowledge and skills. So this is new stuff. It's a new area. It's increasing right now in front of our eyes. So it's an opportunity for accounting and finance professionals to start building their understanding, understand what is AI, what is the difference between AI and automation, what is the difference between machine learning, which learns from the data, and rules-based automation like RPA, like robotic process automation. These are very important differences because RPA will do the same process again and again in the same way based on how it was programmed, whereas AI might treat data differently in the future if the patterns within the data change. So these are really important differences. And think about documentation in your organization, sharing lessons learned from adoption, because that's how you build knowledge and skills and ultimately protect from the risk of breaching the ethical risk of professional competence and due care. So those are really my key comments. And I hope that was useful in giving you a bit of a sense of how this interesting and exciting new space of AI and AI ethics is interacting with ESG and is interacting with the ethical code of professional accountants. Thank you very much. I'm happy to take any questions if needed.
Ce n-am făcut eu de la bun început, am uitat să menționez că în
What I didn't do at the beginning is that I failed to mention that Narayan in ACA leads the research in the field of accountancy and factors that may influence the future. And we actually felt that during the entire presentation. Thank you very much.
Welcome.
Thank you for the lessons that you taught us in the end of your presentations, because they will certainly be useful to us. So, and now, according to our agenda, it's time to have a break. But since we are short on time, I think we will anyway take a break. So the ones that are connected with us online, please don't leave us. We will be back in a couple of minutes.
My name is Rachel Johnson. Yes?
Just a second.
Bună ziua, stimați participanți ai conferinței de astăzi, spectatori din
Hello,
sală.
dear participants, both face-to-face and online participants. Now we'll have the second panel of our event, which is entitled Financial Reporting, Risks, Exposure and Answer. During this panel, we will discuss about a sector that is regulated both in Moldova and worldwide, banking sector. And also another area, which is both charming and scaring, fintech. Before that, I would like to present the participants of today's session. We'll start with Rachel Johnson. Rachel is Head of Risk Management and Corporate Governance at ACCA. Rachel, welcome to our event. Thank you very much for accepting to be part of this session. We also have Diana Elikchiev with us, Chief Accountant at Victoria Bank. She will be speaking about the role of banking accounting in line with IFRS and the report submitted to the financial regulator. Welcome, Diana. We also have Carolina Semenyuk with us, Chief Accountant at Moldova Agrarian Bank. She'll be speaking about certain aspects of banking accounting, and she'll make a comparison between traditional versus digital. Another panel speaker is Yuri Chichibamba. He is the managing partner at Taxaco Group, and he is the co-chair of Tax Committee of AmCham. Yuri will be speaking about the peculiarities related to the development of fintech in the Republic of Moldova, in particular the challenges encountered by entities in this sector in the area of accounting and auditing. Having said that, I'm giving the floor to my colleague, Rachel Johnson. So please, the floor is yours.
Well, good afternoon, everyone. It is such a pleasure to be here today on behalf of the ACCA, even if it is not in person. I'm Rachel Johnson, Head of Risk Management and Corporate Governance at ACCA, and I work in our Policy and Insights team with Narayanan, who was speaking earlier. So we are the ones who advocate, conduct research, thought leadership, and other continuous learning content for our members. Over the past couple of years, I've met a lot of ACCA members in Eastern Europe and around the world who are in charge of risk from a range of various roles. And they tell us that they would appreciate more practical support and discussion, as we're doing today, on how to identify emerging risks on the horizon, and be able to measure all the intangibles that we deal with today more accurately and plan better given all these moving parts. This is not easy given the existential and geopolitical aspects we face today, as we are all affected by the horrific crisis in Ukraine and its accelerating inflationary pressures and risks on the supply and cost of goods around the world. Once again, we have seen how the velocity and context of global risk can change dramatically within a matter of days, if not hours. ACCA members talk to me about the questions they have had to ask themselves and their teams, about the potential threats and what ifs. And the one thing that is clear is that we need to look beyond the past and provide more analysis about what lies ahead, more foresight about what are our expected and unexpected losses, what they look like. We need to do this if we are to remain relevant and have any success at steering our organizations in the right direction. Indeed, we are also facing extreme weather at a faster pace and catastrophes happening daily around the world. In my engagement with ACCA members, I talk a lot about how we all have a role to play, a responsibility to act and work together as accounting professionals. We can do more to work with the regulators, investors, lenders, companies, and all their stakeholders to gather the right information needed to enact strategy for reaching net zero and trying to mitigate all the devastation. that's yet to come. Throughout the past year, ACCA members working with even the most mature frameworks have confided that they do not have the alignment that they thought they did, that sustainability and resilience mean different things to different teams and across the organization, and that they are struggling with all the different reporting requirements and, of course, how they ensure the integrity of the information that they disclose and make sure that the transition risks and opportunities in between are not only detected, but most importantly, acted on and addressed. Everyone seems to have a story about how the various green color coded risks on their registers, how they proved to be some of the most material during the pandemic, and how they never appreciated the interconnectedness of all these emerging and existential and risks and volatility. Members tell us too how they have had to work with teams and other stakeholders more than ever to make sense of what is happening and what is yet to come, what risks matter most to their organization, and what they should do about these potential outcomes. These are extraordinary times, and the things we put in and out of our models need new thinking by all of those who are involved across the three lines. This requires a lot of questions not asked before and a lot of collaboration to understand what information we might already be sitting on or what further data we might need to gather if we are to understand the various scenarios and indeed how to plan for them. Of course, you hear about ESG plus the extra G, meaning geopolitical risk, and ESG plus T for the tech and digital transformation happening so fast in front of our eyes. And when we digest all the events of the past couple years, we can really come to understand what really environmental, social, and governance risks mean. But even if you look before that with the Sino and US trade wars and the rapid digitalization, particularly in the financial sector, the response by financial institutions and some of the resulting trends that we have seen as we soak in and recognize all this volatility came itself really against 2 decades of technological disruption, which completely reshaped our industry. We have seen a rapidly evolving competitive landscape with increasing customer expectations around personalization and an experience. A widening gap in return on equity and cost-income ratio has opened up between incumbent banks and the digital ones, the fintechs, for example. According to a recent report by McKinsey, the cost-income ratio on average for incumbent banks is 55% versus only 33% for the traditional players. Or sorry, the new fintech players. But in addition, we've seen an evolving regulatory landscape, which has intensified the focus on data architecture, governance, and protection, as my colleague Narayanan said earlier. New sustainability reporting requirements in GDPR are examples as well. Regulation has accelerated the evolution of competitive business unlike any other time period. And we have seen that when the pandemic struck, a new contract between societies and institutions was born. And what we see today, it is clear companies need to mitigate their impacts to society and the environment and the resulting alignment of portfolios to ESG principles and how they find positive outcomes, how they make sure positive outcomes happen. As a huge demand for new methodologies, new data sets, and some of which don't exist and are still yet to be created, suddenly everyone could shift into working from home and consuming digital services online. We see many permanent changes in that respect. The response to the pandemic accelerated the consumer adoption of vision technology, and the majority of financial institutions have ignited a new kind of digital transformation by expanding their cloud and their ecosystem partnerships. Organizations we see continue to build new capabilities to evolve new automated digital customer journeys and new business models such as green and digital finance to focus on speed and the automation. So things are changing fast for institutions and their customers and their other stakeholders through the value and supply chains. And this has brought on new implications. And top of this is increasing focus on climate and the new data capabilities, and demand for information we might not have had, but do need to worry to try and ask some uncomfortable questions, many hard to answer, in order to collect this data. But even more than ever is the need for new advanced analytics to enable decision makers right across our industry to balance human, environmental, and commercial outcomes. During these times of crisis, societies look to our professions to make very complex but very important precedents. In terms of emerging and horizon risks, we do know that countries and companies are concerned about a massive increase in cyber attack techniques. And there's a huge focus on security, particularly with the concentration risk in the cloud and how they get the information they need from Amazon, Apple, and Google to plan and build resiliency around that. These turbulent times have also brought up the ethics side of our profession, our purpose, and how we define, act, and verify it. Again, asking deep questions like, who are we doing business with and why? There are more standards coming out about this as well. Take the recently released ISO 37000, the first ever international benchmark for good governance, which centers on how organizations align their purpose with the interests of society and their stakeholders, while also maintaining a sustainable means of production and considerate impact on nature's resources. Accountancy professionals, whether they're in finance teams, internal audit, the C-suite, or at the board level, as well as practitioners, can be integral in asking these appropriate questions that are necessary in shaping the purpose statement and ensuring its integrity. So defining the why and the who is the starting point, and the who must be based on a principle of materiality. Which stakeholders are material to the organization's business objectives, or which other stakeholders does the organization believe it ought to prioritize? Getting to the bottom of these questions is certainly a critical point where accountancy, not least in valuing intangible assets, must be fed into strategy more if the organization is to fulfill its purpose and therefore activate it successfully into its culture. Recent events are fueling more and more policy changes and regulations. And of course, it is our job as accountancy professionals to help institutions, both in the financial sector and in other industries, to reflect on how they can be more resilient, how they can build in resiliency into their supply chain, as that is the focus of a recent directive, European Commission directive on sustainable due diligence that was released. The proposal was released last week. So there's a huge amount of change happening regulatory-wise too, with new implications and at increasing speed. So what I really talk about to ACCA members around the world is about what are these implications. As the old adage goes, risk is about trying to predict the future. And now in this increasingly unpredictable world, it goes almost without saying that we have a lot of new types of risk to manage. And that's why we are seeing our profession in accounting and auditing becoming so much more multidisciplinary. Audit teams, for example, are becoming more like the CIA or 007s. And we have all learned with the pandemic that we all are risk managers in our organizations. We all making decisions about choosing risk and choosing the right ones, hopefully. I cannot emphasize enough how essential it is to expand our thinking around scenarios and to take a harder strategic look at locational strategy, for example. Maybe not just about supply chain, but also where are our areas of growth and strategies, and potentially how can we expand our scenarios to think these unthinkable outcomes. The digital transformations, which started 2 decades ago, have laid down the foundations for the seismic events that we are living in today. But to me, risk is in the process of reinventing itself. And I think that I almost understand more than ever how we need strong risk leaders to define the thinking that defines the wider organization and protects our stakeholders. We definitely need to become more digital, more agile, more talented and diverse, and we most definitely need a more resilient mindset. We need to look at these reporting frameworks and use them meaningfully to plan for what lies ahead. So to wind down, I'd like to point out that we simply have to start somewhere. ESG and planning for ESG risks, creating positive outcomes, they're all part of a journey, not a tick box or a plug-in or an implementation. So as you've seen the slides, I hope you have seen the slides go, let me see, sliding through. I will just want to point out, show some base grounds. So first, I always say there's the United Nations 17 Sustainable Development Goals, which are there to together end poverty, fight inequality and injustice, and tackle climate change by 2030. And I show our specific commitments to the SDGs. Our commitments are a work in progress, and we'll report our shared progress each year in ACCA's annual integrated report. Of course, there's also the Task Force on Climate-Related Financial Disclosures, TCFD, which was created by the Financial Stability Board to improve and increase the reporting of climate-related financial information. Financial markets need clear, comprehensive, high-quality information on the impacts of climate change. This includes the risks and opportunities presented by rising temperatures, climate-related policy, and the emerging technologies in our changing world, as we discussed earlier. There's also the network of central banks and supervisors for greening the financial system, the NGFS. It's a significant development which has grown dramatically in the past years, not least here in Europe. The network's purpose is to help strengthening the global response required to meet the goals of the Paris Agreement and to enhance the role of the financial system to manage risks and mobilize capital for green and low carbon investments. Purpose is what we will end on today, and how we can help organizations understand the purpose of these frameworks. We know how markets, companies, stakeholders, how they've all been burdened by the complexity of the ESG alphabet soup. And while a single unified global standard hasn't yet emerged, we have never been this close to achieving one. As you know, during COP26 back in November in Glasgow, IFRS launched the International Sustainability Standard Boards, providing ESG standardization with a platform with a global reach. The EU has also mandated the European Financial Reporting Advisory Group to build a new set of sustainability reporting standards that will be mandatory under the proposed Corporate Sustainability Reporting Directive. I know this is not directly relevant to you now here in Romania and Moldova, but it is only a matter of time that it is imperative for you to do as companies elsewhere in your value and supply chains ask for this information and require it. Thank you so much for having me today, and please do visit the ACCA Global website for more information on, and guidance on all of that I've discussed today. There's a wealth of useful content on the Professional Insights page, so please do check it out. And I really apologize. I don't think my slides were moving, but there's, oh, maybe they are now. You can see here with our commitments to the sustainability goals, and the TCFD, and then also lastly, which this comes from a report that's on our website about how accountancy professionals and auditors, auditing teams, how they can define and activate purpose to help the organizations achieve their goals. And that's especially related to their risks and their matters that matter to them most around the environment, social, and governance. So thank you once again, and I'm happy to take any questions too.
Mulțumesc mult, Rachel, pentru prezentarea atât de
Thank you very much, Rachel, for such a comprehensive presentation of the risks. And I think the ones who were not sure of that now realized that risks should be assessed daily because they change from one day to another, and they have to be analyzed at least from a perspective of 3 dimensions. So environment, society, and governance. Additionally to that, let's not forget we have an additional subcategory about internal risks, external risks, and economic factors that need to be considered. As Rachel mentioned, the accountancy and auditing occupation has to develop together with the development of information demand, so that it is developed multidimensionally and able to meet all these complex needs, and need to ensure high learning speed in order to assimilate all information that is currently available for reading. Having said that, I suggest that we move to our next speaker of today's session. So I would like to invite Diana Alexiev, who is going to talk to us about the role of bank accounting in line with IFRS. As you know, the banking sector of Moldova is a pioneer in implementing IFRS for many years. So we have more than 10 years since they do that. So I think that the banking system is one of the most readiest systems that know about implementation of standards. So these have already been assimilated by the regulator, the National Bank of Moldova. So please, Diana, you have the floor. Hello, dear colleagues. First of all, I would like to thank and congratulate the organizers on this grand event. Indeed, it is very important to understand how useful and important is the job of an accountant, of an auditor, both in financial and banking institutions and in any other entity. So I would like to explain and inform you from this point of view what accounting means in a financial institution. So accounting is a complex system by means of which we collect, identify, collect data, information that need to be systematized, processed, so that such data are subsequently reflected in the financial statements drafted in line with IFRS or reflected in the reports required by the regulator or other reports presented to external users and bank shareholders. The task of accounting in a financial institution is very important because it has the bookkeeping is the body that needs to manage very well and correctly all elements related to assets, liabilities, own equity, and results from the management activity of a bank or from service provision. What would accounting mean in a bank? And to answer that, it's not only keeping the books in the management process of a financial institution, but it is also the element that implements and sets all processes organized in a bank. It automates all services and new products provided to the bank clients. And in this way, accounting is the link that ensures the connection between the client, the information system, accounting system, and the reporting system. What happens in practice in the accountancy of the bank? The accountant is very important when a business relationship starts with a client or an internal account is opened, or when some accounts are opened with suppliers, partners. At that point, the accountant has to ensure the mandatory analysis needs to include in the information system the elements that are necessary in order to ensure that information is grouped and systematized in a way that they are reflected in the financial statements and in the reports submitted to the National Bank. Banks and financial institutions, being entities of public interest, keep financial accounting in line with the IFRS, as Lilia mentioned. At the same time, there is a number of regulatory acts that are developed by the National Bank of Moldova to the largest extent, it's the chart of accounts for the banks, licensed banks of Moldova, which is a wonderful support for financial institutions when we talk about ensuring the correlation between accounts so that IFRS standards are met. Besides the chart of accounts, and speaking of a reporting system, there are other regulatory acts that regulate the reporting towards the regulator. And also, we have an instruction that sets the way certain electronic reports are to be submitted to the National Bank. As opposite to entities from the business community, financial institutions are entities that have a reporting system that relies on today reports. So besides daily reports, financial institutions submit weekly reports, monthly reports, quarterly and annual reports. It's important that every financial and economic operation is reflected in the report submitted to the National Bank, and all operations have to be reflected correctly in the appropriate period that they took. So there are some operations that are being adjusted in the financial statements, financial reports submitted to the National Bank, and only if the banks have an appropriate bookkeeping system, only when they have an appropriate reporting system, such adjustments can be included in the reports in an automated manner. Therefore, it is important that licensed banks from Moldova to highlight, to emphasize a complex reporting system so that all financial statements drafted by the bank and all reports submitted to the regulatory would be comprehensive and correctly drafted. We know that lately the IFRS requirements and regulatory requirements have been growing on what information needs to be disclosed. And also, there is an increase in the type and range of operations and service provided by the banks to their clients. And to this end, it becomes necessary to ensure an appropriate analysis and in a way that we can ensure the reporting by segments, reporting by sectors, by industries, by economic categories to the National Bank and to our external and internal data users. These developments that are ensured also help a lot the management of the bank in decision making, so that these new implementations and developments allow better analysis of profitability of areas of work and of the bank. Lately, in order to ensure this appropriate reporting to the regulatory and to draft accurate financial statements, a lot of emphasis is put on implementing automated reporting systems, to implement data warehouses, to have appropriate systems for bookkeeping. So drafting financial statements actually in a financial institution is impossible in an Excel spreadsheet, because the portfolio of the clients and diversity of services provided by a financial institution are huge. And only by automation of processes, digitalizing the processes, it is possible to develop financial statements in line with the provisions of the IFRS, and doing that in due time, providing reports to the regulator and providing comprehensive information to external users. Thank you. Thank you very much, Diana, for such a warm presentation of a reporting framework in the banking sector. And before moving to the next speaker, I would like to say that I have a special love towards banking system, because that's where my audit sector started in 2007. My first audit client was a bank from Moldova, and it was in my first week of work. So at that point, I realized how interesting this branch is and how important it is to have an understanding of the analysis used in the bank, and the need to segregate the information in internal reporting of the banks. Having said that, I would like to invite our colleague Carolina Semeniuk, Chief Accountant at MAIB, who is going to make a presentation about accounting of banking services and their development from traditional to digital. Brief introduction: this development is both proactive and reactive, and it is dictated by the fact that bank services or bank service users want to have as much innovation as possible, and such innovation has to be taken over by the banks in order to stay competitive on a very competitive market in Moldova. Carolina, you have the floor. Welcome. Hello, and first of all, I would like to greet you. I'm honored to be here with the best experts in our field, and best experts being together at this conference. I think the topic I want to elaborate on is probably not accounting of banking services, but it's accounting and bank services. Why? Because the pandemic showed that digitalization is very important in our life. We noticed that a lot of processes happening face-to-face moved into the digital plane, and most transactions, were ordering goods or medicines or providing financial support to your dear people, or to the ones that you want to help. Behind each of these, there's a bank. Behind each of these transactions, there is a financial environment. Therefore, we can say that both in relationships between individuals and relationships between individuals and entities and small business and big business, the financial institution is a link that connects them, and it is absolutely necessary in order to organize both the business and the personal life. What I would like to say about the comfort in using banking services for accountants, it is, one can notice that despite the fact that banks, even before the pandemic and during the pandemic, the banks evolved a lot and provided new products on the market. However, not all products are well received. Not all of them are used by our accountants. Maybe there's some anxiety regarding the regulations that are not adopted yet, not so flexible so far, and everything that exists today, like remote services, POS terminals, portable POS terminals, self-service terminals, a possibility to access and make transactions from a computer and from other devices such as smartphones, on Apple, on Android systems. Also in Moldova we have, it's present, there are things in the world that exist in the world, and we are waiting for them in Moldova. Many innovations that would allow us accountants to have our work done easier. So in the future, we expect the possibility to download all transactions and for them to be compatible with accounting systems. In the future, it will become easier to identify the client, to have voice identification or face ID. In the future, we will have a possibility to use equipment for money storage, not needing to carry them or to give them to the cash collection team and accessing them directly to the client's account. We're already waiting, and I encourage you to monitor all of that and use them as soon as we have them available. As I said, while talking, well, before this conference, when I was talking with my colleagues from IT, who told us what exists in the world, what we expect to be implemented in Moldova, many apps that will allow accountants and managers to have online information, download a lot of reports. So when I was talking to them, I had the question, but with all of these opportunities, won't the accountant profession disappear? Like maybe a small business director could think that I don't need an accountant now because the systems of interaction with the banks allow them to make payments and make payment orders to pay and to pay the taxes, to download and have compatibility with financial reporting system, with tax reporting systems. And I think that the answer may be yes, but why? This may happen if we fail to evolve, if we fail to transform. Well, if we transform, if we develop, we will stay as a profession. Otherwise, we will disappear. So to put it in a sentence, what's the meaning of digitalization in accountancy profession? I think it's Alice in the Wonderworld by Lewis Carroll, who said that if you want to stay in the same place, you need to run equally fast. And if you want to reach somewhere, you need to run twice as fast. So what we say about the speed of technology development, not just in banking, but in all areas, we accountants need to run as fast as them. We need to improve as fast as them. Still, we don't deny that there are challenges, there are obstructions in doing that, such as cases when the management focuses, out of all technology, focuses mostly in buying the ones needed for the sales management production, and not so much invests in digitalizing the bookkeeping. We know that there are some legal obstructions as well, because the legislation does not change at the same pace with the startups and new technologies in the world. We also notice a lack of education in choosing and selecting out of the multitude of digital apps that are provided, choosing the ones that are really useful and really rational. And as a result, these obstructions still lead us to the fact that in accounting, we keep using paper, even though use of modern apps would allow us to minimize it or to move into a paperless world. Consequently, we need to understand that it is not required of an accountant now to just keep the books, but to use technologies. So the expectations towards us is for us to become a manager, because the owner, the manager of a business, wants us to be their right hand on the side of resource management. They want us to deal not with processing papers or entering invoices and working with bank abstracts, but to plan taxes, to manage information, to do that to ensure that information is received quickly and is accurate. So technology changes the rule of the game in all spheres of our life, in all businesses, which means it does that in bookkeeping, reporting, and taxation. Given that I represent the financial environment, I encourage you, well, despite the existing obstructions, despite the existing misunderstandings to some extent, let's use the digital products and services that the banks offer, such as POS terminals, such as, well, which allow to service the buyers that have no cash. Let's use portable POS terminals. Let's use remote service systems. And last but not least, I would like to tell you about business card opportunities that would allow us to make quick purchases, and we hope that soon the authorities will amend the legislation and would allow us to recognize ID when paying with business cards without the need for invoices. Also, we accountants, in order to support the business, to keep our profession and to be efficient, we need to promote not just digital products, but also the new instruments that are not only digital. For instance, buying securities, using options, and other instruments. And I would like to talk a little bit about cashback, because I noticed lately among accountants a lot of discussions and debates with pros and cons regarding the use of cashback. Why? Because it is not well understood how it works. Maybe, or well, certainly, there is a lack of clarity and clear regulation in this regard. And what's cashback actually? Cashback is a data processing tool that replaces a voucher or a bonus or a discount card and allows the vendor or the service provider to focus on selling merchandise and to encourage the sale of goods and to have better relationships with the buyers, consumers, leaving behind for the banks to process all transactions and to make all these calculations. And respectively, the cashback, in our opinion, should be viewed as a discount, because a lot is being discussed. Is this like a gift in a promotional campaign? Is it an income for the individual? Or is this perceived as an expense of the seller or service provider? So the easiest, I think, most comfortable and cashback should be viewed as a discount. But having behind some transaction processing, like paying for goods or paying cashbacks. At the same time, we hope that soon there will be more clarity about it, because in European countries, like in Romania, for instance, it exists in other European countries as well. There is a legal framework specifically explaining how cashback should be treated, and the accountants and users of cashback have no issues with it and have no obstructions as we do. Thank you. I encourage you to use all digital products that financial institutions are providing, and may them help us in our accountancy jobs. Thank you very much, Carolina, for such an interesting and interactive presentation of traditional services and migration to digital services in the banks, including in the bank that you represent. And the last topic of our today's discussion, and one of the most futuristic topics, is fintech that stimulates the imagination of the financial and banking sector. When we first talked about it in 2014-2015, this was discussed quite a lot in the business sector, and at some point it was said that fintech will eliminate the banking sector from the equation. Practice showed that the traditional banking sector cannot disappear because it is the mechanism that regulates and promotes monetary policies in a country. At the same time, fintech must be viewed as an aid in promoting financial banking services in the business environment, including as a bridge between service users and the products that can be provided both by fintech companies and banks that are working in the respective regions. So I would like to invite my colleague, co-chair in the tax committee of AmCham, Mr. Yuri Chichibaba, to share with us what challenges fintech companies face in the Republic of Moldova. Thank you very much. First of all, colleagues, I would like to congratulate you on the eve of the professional day, both accountants and auditors. I wish you a wonderful closing of the year. So for us, the new year comes late and not like for normal people. And if I were to talk about fintech, you know, in reality, it's really easy to tell, to talk about it, because everything about fintech was already mentioned. So what is fintech? Well, we have a cashless payment or cashless loan. In this case, there could be a company that could help you do that with digital tools, smartphone, digital currency, digital wallet, or other digital possibilities through a client bank, because this is also part of that. And in Moldova, fintech is now represented by 6 companies, unfortunately, only 6 companies. That's unfortunate. And they are all part of providers of payment services. And if we were to think, what is this? It's just the same bank, but it is limited to financial transactions only. It is responsible to help clients to make payments for, let's say, utilities, other types of services, for purchasing goods online, physically. And at the same time, to look deeper into it, we understand that like a bank, or this field is supervised by the National Bank of Moldova. And as a result, the regulatory acts that fintech falls under are the following. First of all, the loan payment services and digital currency. That's the main law that by means of which the National Bank of Moldova is appointed to be the regulator and supervisory authority in this area. Like the AML law is also valid for us. Law on accounting, of course, I don't have to talk about that. Law on currency regulation, tax code, decision of the Administration Board of National Bank approving the instruction on data on use of various payment services tools, and the government decision on cash registers when making payments. So the same regulatory framework as the banks have from the perspective of making payments. This is an advantage for payment providers is easier that we have to report to the National Bank quarterly, not monthly as the banks do. So when this area was launched, this was an experiment for everyone. The NBM, in the discussions that we had, and it was terra incognita for them when they started it, and it was a terra incognita for businesses when they started this.
Deja, după când legea a fost aprobată în 2012, piața s-a format. Deci, noi, piața așteaptă încă un nou jucător.
The market is waiting for another stakeholder on the fintech market. I mean, approval of the law on services of crowdfunding. For 2 years, there are some discussions that the law will be approved. We know that they received already all the legal opinions, and we hope for the law to be approved at the government level and then submitted to the parliament. And our colleagues from the fintech area are aware of this, and they are somehow prepared. But frankly speaking, I wouldn't want to be in the shoes of a financial manager or chief accountant of a crowdfunding company at the very beginning. Why do I say that? If we are to speak about accounts for banks, they are already approved. Service providers use the general accounts approved by the Minister of Finance. And in my personal experience, I understand that we need flexibility in adding level 1 accounts. Why? Well, let's analyze a simple situation. We all know that all of the businesses, except for banks and loans and savings associations, have to submit the profit and loss account in the standard form approved by the national accounting standards, unless we use IFRS. Unfortunately, IFRS are not that commonly used in our country. So, knowing the activity of the payment service providers, I'd like to say that this profit and loss account is not informative at all for taking decisions or for making a comparison with my competitor or with a bank. In the area of payment service provision, because they are competing in this area. So if we are to see the profit and loss statement submitted by payment service providers to the National Bank of Moldova on a quarterly basis, it is divided into sections, e-money and payment service provision, and then they have other activities, investments and miscellaneous. They are somehow lower, and this allows for a deeper, more accurate comparison to see what is happening in banks and the payment service providers. And when the loan crowdfunding is approved, I believe all of us have to be ready, and this is a kind request to the Minister of Finance for us to have this flexibility for this area in terms of, or at least in the chart of accounts. If we are to analyze the standard chart of accounts approved by the order of the Minister of Finance 118 of 2013, additional accounts were introduced for NGOs and additional sub-accounts for non-banking credit organizations. So we could say that the non-banking credit organizations are also the future, a part of fintech, because they're also gradually going through this, getting the license or even comparing with banks. So clearly the chart of accounts stipulates that we could add only level 2 accounts, meaning 4 digits for class 117. So we're speaking about the balance sheet and profit and loss accounts. But if we are to go deeper, let's see what is happening. The general law for payment service providers stipulates that at least these companies should protect the funds. What does it mean? It means that the money collected from the clients that are not transferred yet to suppliers at the end of the next year should be stored on separate bank accounts or payment accounts of other payment service providers. And these special accounts, and my colleagues from the banks will confirm, are exempt of enforced implementation. So tax service or bailiffs cannot apply or cannot seize them because the money does not belong to the payment service provider. These are money collected from the clients for a supplier that have to be transferred in the following days. So if we are speaking about the automation of financial statements, in my opinion at least, this account should be reflected separately in the balance sheet when we submit these financial statements. The liabilities that are formed from the perspective of the activity are of two types. Liabilities to suppliers, I mean companies for which we collect money, for example, Orange or a non-banking organization. And there are also agents. It means that any company can buy a cash-in device, install it in their location, and accept these payments. This cash-in terminal is connected to the system of the payment service provider, and all of the transactions conducted via this cash-in terminal that de facto belongs to a company that does not have a license but is listed as an agent. And this listing can be found on the National Bank's website. And all of the money that is in that cash-in terminal is used by this agent, but the agent has to transfer this money to the payment service provider. And as a result, a division into two types of liabilities, one to the agent, and in this case, this agent transfers this amount in advance, and the liability to the supplier already. This is the accrued liability using one account 544 that is used by the companies, or 593 if we speak about advance payments, do not fully reflect all of the nuances. So as a result, we need to introduce additional information in disclosures. As I've said already, if banks digitalize their operations gradually, payment service providers focus on digitalization from the very beginning. All of the services are provided in a digital world, and this statement, co-banking, so this is the core activity for the payment service providers, and the accounting is done in a classical manner once a month, but at the same time all the transactions are done ongoingly and are reflected each second or millisecond what is happening, and this should be reflected, and this report should be divided. This also means, what does it mean for the auditors of payment service providers and hopefully for crowdfunding companies? This means that they need an audit of the systems managing the core banking. And we return back to this idea that the chart of accounts, if for banks it is separated, the National Bank of Romania for this service, for the payment service providers, also used a separate account in Romania. In my personal opinion, I believe it is not necessarily for us to have a separate chart of accounts, but what we need is flexibility to be able to introduce additional accounts in the chart of accounts at the first level, 3 digits, not only for the managerial accounts that is allowed now. For all of us to move to IFRSs, well, that's another issue, that's another problem for payment service providers, because it means that the accountants have to relearn, and compared with banks and the turnovers, I believe that that would not be an efficient approach now. Hopefully in the future that would be possible. Thank you. Thank you very much, Yuri, for presenting the situation, the current situation of the Republic of Moldova, and how prepared the regulatory framework of the Republic of Moldova is to apply the practices and fintech opportunities. Regarding the topics that you've raised, I would like to underline one more time several of them. So you've said that currently we have 6 fintech operators on the market. Is it a high or low number? Well, it depends how we view it. For sure, a new sector with 6 operators opens up broad opportunities for the others that would like to join this sector. If we're to speak about the tandem between fintech and banking services, of course, the banking services has to run, as Carolina said, at a pace that is not slower than the pace in the fintech area. And if we are to speak about being afraid to start reporting on the basis of IFRSs, well, I believe that could be an applicable solution for the 6 operators existing on the market. But nevertheless, we need to make a cost-benefit analysis. However, IFRSs provide answers to many questions that were raised today. And yes, indeed, they could serve as a source or to the Minister of Finance or our authorities to take over the international practices in terms of fintech regulation. Having said that, I would like to thank you very much for your participation in this session. I would like to participate the moderators and panel speakers that presented very interesting and useful topics for the financial and banking sectors, as well as for the fintech area, risks, accounting, digitalization, non-banking financial services. This should be viewed as a sustainable pillar for the development of the banking sector. Thank you very much. And we'll be waiting to meet you in the next sessions.
Iată, ne-a ajuns și la ultima sesiune a
Here we are at the last panel of the first day of our conference. So we'll try to sum up now the outcomes of the first day, and we will find out what will happen tomorrow. But before that, Mila said this morning that if everything goes as planned, we will have a very important draft law approved in 2 readings, a draft law that is very important for the banking sector and the auditing area. And I would like to congratulate you. I was informed that it was approved in 2 readings and it was sent for promulgation. So the situation is very good in this regard. I'm very glad that was the result of a joint effort of AmCham and ACAP, and I'm very glad that on this very day when we have our event and on the day of accountants and auditors, we have this achievement. Well, if we are to speak about the totals for today we had 2 panel discussions. The first was about the fundamental aspects, and the second one was about financial banking and fintech areas. Natalia, maybe we could make a brief summary of what we have discussed in the accounting and audit areas. Yes, indeed. We had quite a rich panel discussion. We've addressed national accounting issues as well as for the entities that are complying with the international financial reporting standards. The speakers raised issues that accountants are encountering currently. These are mainly related to the national accounting standards. Lilia also presented very well the amendments made to international financial reporting standards and how we can apply them. And she told us about the retrospective implementation of some amendments, or retrospective application of some amendments. In my opinion, it was very interesting to listen to the presentation about the need for an external auditing. So hopefully after today's event, some employers and professional accountants will review their visions and opinions about external auditing. Also, like the cherry on the cake, we had a presentation on professional ethics and the peculiarity of applying professional ethics in a digital area, which is both interesting and controversial. So these were the most important things discussed. And before giving the floor to Lilia, I would like to thank the legislator for the gift they made on the eve of our professional holiday. Thank you very much, Natalia. Regarding the second session that we had today, that was entitled Presenting the Risks and the Reporting Framework in the Financial Banking and Fintech Areas, in particular, with a particular focus on the market of the Republic of Moldova. The guests for these panel discussions included experts in the financial banking sector of Moldova, experts in the implementation of fintech regulations in the Republic of Moldova, including auditors who have rich auditing experience. We also had the international experts from ACCA who spoke about the evolution of risks in the global environment, including the 3 development pillars of risk management, environmental related risks, society related risks, and risks related to applying a correct corporate governance. All of these topics were very interesting. I hope very much that those that were not well familiarized with digitalization in the banking financial sector heard interesting ideas. Those that were afraid of fintech now have some courage to find out more information about this. Who are those 6 operators present in the market of the Republic of Moldova that are applying these services? And why not to learn to invest soundly and use their money in the correct directions? Thank you very much. So I think we will end here the summary of today. Tomorrow, we will have the second day of the conference. Tomorrow, we will start at 9:30. We will have other 2 sessions, other 2 panel discussions. One of them will be about digitalization in a more global aspect, digitalization of financial services per se. We will find out many interesting things, and we will hear from a number of companies about the experience of implementing these new mechanisms in the daily work of an accountant or an auditor. And during the second panel discussion, we will focus on the risks and opportunities in the non-banking financial sector already. It is insurance, non-banking services sector. So we are waiting to see you tomorrow.